Good morning, everyone. I'm Millie Hong, Head of Events at ASIFMA. Thank you for joining us today at this virtual event, Korean Capital Market Analysis, Overview and Investment Opportunities. It is our pleasure to co-host this event with Korea Financial Investment Association, KOFIA. Let me introduce our host today, Mr. Myung-soo Sim, Deputy Director, International Affairs Department at KOFIA. Myung-soo, over to you, please.
Okay. Can you see me? Melly?
Yes.
Okay. Yeah. 안녕하십니까? Thank you, Melly. Good afternoon and good morning, everyone. We are really happy to co-host this virtual event with ASIFMA, and we are thrilled to have more than 200 audience from 13 jurisdictions joining us today. And again, I would like to extend warm welcome and thank attendees from all around the world. Let me tell you a little bit about the program. So we will going to start the event with the welcoming remark from two representatives of two associations. Then there will be 3 presentations on Korean capital market, focusing on macroeconomies, securities, and bond market from the 3 featured Korean market analysts. After that, there will be a panel discussion regarding overseas investors' view on the Korean market. And 15-minute Q&A session will be followed at the end. And to the audience, I would also encourage you to send us questions anytime throughout the event by using the Q&A session, using the Q&A toolbar, and we will take care of your questions during the Q&A session at the end of the event. Okay, let me invite two host representatives for welcoming remark. But firstly, I would like to ask your generous understanding for the recorded welcoming message from KOFIA Chairman due to the inevitable outside engagement. Now, Mr. Jae-chul Na, Chairman of KOFIA, will be giving us a welcoming remark over the recorded video. Please welcome.
안녕하십니까. 한국금융투자협회 회장 나재철입니다. 코로나 팬데믹으로 인해 여러분을 직접 만나기는 힘들지만 온라인을 통해서라도 이렇게 인사를 드리게 돼서 무척 반갑습니다. 먼저 오늘 행사의 공동 주최자인 아시프마의 마크 오스틴 CEO님께 감사의 말씀을 전합니다. 그리고 행사를 공동 기획하고 패널 토론 사회를 맡아주시는 린든차오 상무님께도 감사드립니다. 또한 한국 시장에 대한 지대한 관심으로 오늘 함께 하신 아시프마 회원 여러분들을 진심으로 환영합니다. 특히 한국 자본시장을 대표해서 발표를 맡아주신 한국증권회사의 세 분의 연사님들과 패널 토론에 참여해 주실 해외 패널님들께도 감사 인사를 올립니다. 지난 3월 코로나19의 글로벌 확산세가 커진 이후로 우리 협회는 회원사들을 위해 글로벌 투자 시장의 현황과 전망을 주제로 웹 세미나를 16회 개최하였습니다. 그런데 외국 투자자들을 위한 한국 자본시장 투자 관련 웹 세미나는 이번이 처음입니다. 오늘 17번째 웹 세미나는 코로나19의 충격에도 선전하고 있는 한국 시장의 거시경제 현황과 투자 동향을 점검하고 한국 시장의 투자 기회와 과제를 논의하기 위해 기획한 뜻깊은 행사라고 생각합니다. 최근 저성장, 저금리, 고령화 국면의 지속과 함께 코로나19가 장기화되면서 새로운 투자 상품을 개발하고 투자자의 자산을 안정적으로 운용, 관리할 수 있는 자본시장의 역할이 더욱 중요해지고 있습니다. 코로나 팬데믹 상황에서 협회는 회원사를 대표해 시장 친화적인 제도 개선을 위한 여러 과제를 금융당국에 전달하고 있습니다. 우리 협회가 주최하는 핵심 과제는 매우 다양합니다만 최우선 과제를 말씀드리자면 다음과 같습니다. 기금형 퇴직연금 및 디폴트 옵션 제도 도입 등 연금제도 개선, 증권거래소 인하 및 펀드 간 손익통산 등 세제 개편, 혁신기업의 성장을 지원하는 모험 자본 조달 활성화, 투자자의 수요에 부합하는 새로운 금융투자 상품 발굴, 그리고 시장 중심의 선제적인 자율규제 등을 추진하고 있습니다. 해외 투자자 여러분들께서도 많은 관심과 지원을 부탁드리겠습니다. 아무쪼록 오늘 세미나가 외국 투자자분들에게 한국 시장의 현황을 점검하고 투자 기회를 모색할 수 있는 좋은 기회가 되기를 바랍니다. 금투협 회원사 임직원들께는 한국 시장에 대한 글로벌 플레이어들의 인식과 기대를 확인해서 우리 자본시장이 보다 성숙해지는 계기가 되기를 기원합니다. 마지막으로 최근 글로벌 K-팝이 각광받고 있습니다. 한국의 보이밴드인 BTS가 아시아 가수 최초로 빌보드 차트 1위를 기록한 바 있고, 투자 측면에서는 이들 소속사가 증시에 상장해서 국내외 투자자들의 관심이 집중된 바 있습니다. 또한 코로나 시대를 이겨내는 K-방역도 해외에 관심을 받고 있는데요. 이처럼 한국에는 전자와 자동차는 물론 문화, 의료 등의 분야에서도 세계 최고 수준의 투자 대상들이 많습니다. 해외 투자자 여러분들의 많은 관심을 당부드립니다. 감사합니다.
Okay, thank you very much, Mr. Chairman, for the welcome remark. And now let me pass my time to Mr. Lyndon Chow, Managing Director, Head of Equities and Post-Trade of ASIFMA, to give us a welcome remark. So, Mr. Chow, the floor is yours.
Thank you very much, Myung-soo, and for organizing this joint webinar together with KOFIA. And I just want to, on behalf of Mark Austin, who unfortunately cannot be here today, express our deepest thanks for Chairman J.C. Na for his kind opening remarks. And a warm greeting to all KOFIA members on the line. On behalf of ASIFMA's members, we are very excited about the Korea marketplace. Korea continues to be one of the darlings within the emerging markets. And it's with this that many of our members and I paid a visit to Seoul in November of last year. We're impressed with the gleaming skyscrapers, with the first-class airport, and not only with respect to the hardware and the huge advances as a technology leader, just really impressed by the cultural outreach of Korea upon the world stage. Not only winning the Emmys with the movie Parasite, but also I just learned from Chairman Na about the boy band BTS topping #1 on the Billboard. So congratulations for Korea for truly emerging on the world stage. And it's with this excitement and enthusiasm about Korea and the marketplace that our members not only paid a visit in November, but also got together and put together a white paper on the capital markets in Korea. It's with a constructive mindset that we would love to continue to work with KOFIA and work with others in the Korean marketplace to explore how to further grow the capital markets to be commensurate with the real economy in Korea. And we were supposed to visit Korea again in February to meet with yourselves, to meet with FSC. Unfortunately, owing to COVID-19, that's been delayed. But we are very much excited with this webinar format. And perhaps until the travel restrictions get lifted, we can continue to use this format to continue to engage you and to collaborate with you and to partner with you to figure out how to grow the Korea market together. So with that, I close my opening remarks. Thank you. Back to you, Myung-soo.
We don't hear that.
Okay, can you hear?
Yeah, thank you, Lyndon. So without further delay, let's welcome Dr. Jae-chul Chang, Managing Director, Chief Economist of KB Securities, who will talk about the 2020 and 21 macro outlook for Korean economies. Dr. Chang, hand it over to you.
Okay, thanks for having me here. And then I'm really happy to present my most updated Korea macroeconomic forecast, especially for the 2021. As you see in the cover pages, this 2021 is the year of the first year of the post-corona recovery of the global economy, and then for the Korean economy, it's the kind of beginning of the economy to the potential levels of the economy, but the recovery could be the very slow. In the next slide, I'm gonna briefly review the Korean economy and global economy for the 2020, and then I'm gonna focus more on the 2021 forecast. As you know, the global economy experienced the recessions in the first half of this year, but there was very fast, better than expected recovery in the third quarter. Korea was the same actually, but the recovery pace on average level is not as strong as in China and US. So this year, we expect the Korean economy grow around the minus 1.3%, but that is the third negative economic growth rate since the BOK reported the GDP data since the 1954. To cover those kind of negative growth, the BOK rolled the base rate to the 0.5%, and the government implemented the full supplementary budget, which is almost 3% of the GDP. As a special measure, BOK adopted unlimited liquidity support facilities, as well as the loan supporting vehicles such as the corporate bond-backed loan facilities, as well as the bank intermediate lending support facilities. Next slide shows that the current Korean economy recovery is a little bit lukewarm. As you see in the top left chart, the industrial production recovered fast in the June and July, but recently it's slowing down. And the number of the employees remain below the level of the before COVID-19. We still lost around the 900,000 jobs compared to the previous COVID-19 level. And then inflation is really subdued, especially for the core CPI inflation. But on month terms, we saw the pickups in the headline inflation, along with some vegetable prices increases after the flood and typhoon. The business sentiment and consumer sentiment remains very weak. So Korean economy is recovering, but overall recovery pace seems to be very weak. But we have some good indicators, especially for the leading indicators. In the next slide, we saw some pickups of the export in the September, which turned to the positive growth on year-on-year terms, and also investment indicators shows the very resilient recovery, especially we see the very high numbers of the inputs of the capital goods, which is a leading indicators of the total equipment index. But those capital good inputs are mostly driven by the semiconductor sectors. And then also the cycle of a leading indicator, leading composite index, as you see in the bottom left-hand side chart, or has the uptrend since the June and July. So we may have the good, better economic situations in the first half of the next year, according to these leading indicators. The global leading indicators is also picking up. In the next slide is for the macro forecast for the 2021. And then we made the key assumptions about the US-China conflict, which will not escalate further. So the tension between two countries is going to be similar to current level. And then vaccine for COVID-19 will be distributed wisely in the first half of the next year. So we do not assume serious lockdowns of the economy in the major countries. Under those key assumptions, we expect the Korean economy to grow 2.7% in the 2021, and then the recovery will be mostly driven by the consumption's export sectors. but the recovery pace itself will be slowing down from the second half of this year to the second half of the next year, as we illustrate in the bottom left-hand side chart. And then with this recovery pace, we think GDP level will recover to the pre-COVID-19 levels in the third quarter of the next year. But the private consumption's export sectors will take some more time to reach those kind of levels. If we go to this sub kind of component of the GDP in the next slide, private consumption will increase around 3.5% along with the steady job growth. Next slide, please. And then we expect the export and import grow around the 7% on year terms, especially along with the global trade improvement. We think the sectors of the semiconductors, auto machinery, and COVID-19 related biomedical product sectors has the good prospect. We see the very resilient facility investment during this year and next year. By the next year, facility investment will grow around 6.43%. And then those are due to the recovery of the consumptions and then export. As I mentioned, the main driver will be semiconductors or the internet communication, and then those kind of sectors. But the construction investment will likely contract around 0.3%, mainly due to the sluggish commercial and industrial building constructions. But we see some upside potentials along with the government budget increase in the SOC sectors, and then the Korean New Deal related business could increase the construction investment. So there's some upside potentials. And then job growth will be around the 220,000 in the next year. And then those will be mostly driven by the manufacturing sectors with the export recovery. And CPI inflation will be 1.0% next year from the 0.6% this year. So 1% is below the BOK's inflation target of 2%. And then we see the big kind of deflationary factors due to the free education and strong Korean won and some cuts of the special consumption taxes. But there's also inflationary factors. We think WTI, the oil price, will increase 27% from this year to next year. So the average price level will be $50 per barrel. And then we expect the higher monthly and then genset price next year. And then all of this indicates that Korean economy will will be in the recovery mode, and then the economy will approach the potential level gradually with the very low inflation. So BOK is not likely to change the base rate at least to the end of the next year. So we expect the policy rate will be 0.5% to the next year. And the next slide, we highlight that government spending is going to be necessary for the next year's economic growth because the overall growth rate is 2.5%. But as you see in the bottom left-hand chart, the government spending contribution to the GDP growth rate will be around the 1.5% point. And then also, the 2021 budget is almost same as the 2020, this year's budget with the supplementary budget. So we expect another supplementary budget in 2021 to accelerate the recovery pace. So it may come in the second half of the next year. And then Korea economy has some issues on the household debt, and recent increase in the fiscal spending could increase the public debt as well. So firstly, the government is expected to maintain the fiscal deficit of the 5% of the GDP to the end of the 2024. So the government debt could rise to the 58% of the GDP in the 2020 from the 44% in the 2020. So the government burden, that burden will increase, but as you know, the 58% level is relatively low level compared to the global average or the advanced economies. And then a recent low or interest could reduce the debt service burden of the government. And then household debt, which is around the 90% of the GDP, and then 163% is for the disposable income. There are some tables. And then recently, as you see in the right-hand side, right bottom side chart, the growth rate is picked up along with the housing price increases in the first half of this year. But after the government had the measures on the market in July, we see some slowing down of the household debt growth. So going forward, we expect the government will maintain those kind of hard measures on the household. So household debt growth could slowing down further in the next year. In the last page, I summarized those kind of forecasts for the 2020 and 2021. And then especially at the bottom line, we put the US dollar Korean won exchange rate. Recently, dollar won is at the 1130 levels. It is. I think we think that is the kind of the overshooting along with some uncertainties in the U.S. elections and then kind of the related issues in China. But we expect the dollar won will end 1150 at the end of 1165 at the end of this year, and then 1130 to the end of the next year. So that's all from my side. Let me stop here.
Dr. Zhang, thank you so much for your thought-provoking analysis on Korean economy. Next, let me give you Mr. Woo Chang-jung, Head of Global Equity Research Team of Mirae Asset Daewoo, who will share with us latest issues and investment strategies of the Korean securities market. Mr. Jung, over to you. 스피커를 켜셔야 됩니다. 아직 무음입니다.
Okay, thank you very much for Myung-soo for the introduction. On page 2 of the slide, please. Yeah, 3 main points that I'd like to talk about for the next 15 minutes. Firstly, the very brief market overview of the Korea equity market, followed by Korea equity market issues, 4 issues mostly related to the retail investors, which has been very aggressive in the KOFIA market. And lastly, then how to play the Korean market as a foreign investment perspective. On page 3, very briefly on the overviews, the Korea has 1.5% market share, the share in MSCI all country world index. In the MSCI emerging market index following China and Taiwan, Korea has roughly 12% the share. On page 4, this 1.5%, the stake in MSCI AC World Index, from historical perspective, it used to be much higher. Back in 2011, it was over 2%, but for the past 10 years, due to slowing corporate earnings prospect and also tighter regulations and aging demographics, Korea has continued to lose its share in MSCI, the World Index, to 1.4% at year end last year. But since the beginning of this year, helped with the re-rating and the KOFIA, MSCI index, the portion has been up to 1.5%. We believe that for the next 1 year, this market due to share gaining of Korea in the MSCI, the World Index, to continue. Let me explain why in the later part of the presentation material. On page 5 of the presentation material, the KOSPI sector allocations, semiconductors has the highest portion at 27%, the stake in the KOSPI, many thanks to Samsung Electronics and SK Hynix, which has been the biggest to individual the companies in the Korea stock market. Healthcare 9.3% and software 8.6%. This non-manufacturing sector has been picking up quite drastically. So over the next 4 to 5 years, we believe that this non-manufacturing sector portion to continue to go up. On page 6, very brief investor breakdown. Foreign investor holdings has been down to 34% as of October this year. In the past, it was much higher, but recently the retailers has been aggressively accumulating the KOSPI, so foreign investor holdings has been down to 35%. Next, page 7. Retail investors, in terms of domestic stock trading, the value, the retailers now has been taking up almost 80% of the total domestic stock tradings, as you can see on the left part of the chart. On the right side, the orange institutionals and the black, the foreign investors, their domestic trading, the share volume, shares has been down to less than 15%. On page 8, there are 4 main issues in the Korean equity market right now, happen to most related to retail the investors. The biggest, the first, the issue should be changes in majority shareholder rule. Simply speaking, if you are a local Korean retail investors owning, let's assume, $400,000 worth of Samsung Electronics shares, under the current regulations, you don't have to worry about capital gains tax on your potential disposal of your Samsung Electronics shares, because under the current regulations, you are subject to capital gains only if you own more than 1 billion Korea won worth of a single the stock. But recently, the government trying to lower this threshold from 1 billion won to 300 million won, which translates into roughly $280 to collect more taxes. So there are some market concerns that a lot of local retail investors try to sell or chop down their stake to avoid these potential capital gains by the year end. So that if that happens, that would be negative for the overall market sentiment for Korean equity market. But we believe that the market concern is a bit overblown on 2 main reasons. Firstly, if we just estimate the overall the holding value has been owned by the shareholders, which are subject to the change in the majority shareholder rule, overall value would stay at only 40 trillion won. 40 trillion won is a big size, but if you look at the recent average trading value for KOSPI and KOS stock is roughly 20 trillion won. So if we assume that all retail shareholders sold off their 100% stake to avoid these capital gains, that translates just 2-day trading the value. And we believe that not all retail investors will sell off all of their stakes. So we believe that overall, even if there is a sell-off, because of this, overall the negative impact should be very short-lived. It does not extend a certain period of amount of time. If you turn to page 9, yeah, one more slide, please. Yeah, second issue is extended ban on short selling. To stabilize the stock market, the Korean government implemented a ban on short selling. The first short selling has finished in September, and recently the government, FSC, they announced the extension of the short selling to March next year, immediately after the current 6 months restriction expires in September. In fact, we believe that this is a positive for overall sentiment for local retail investors. In fact, after the temporary ban on the short selling, KOSPI has been up like almost 38%. We do not think the KOSPI has been rallied mainly because of this, but the ban on short selling have definitely gives a lot of positive sentiment and confidence to local retail investors. So the ban on short selling extension will be the positive for the overall the KOSPI, the market the next year. Next slide. Page 10 is the government's strong intention to boost domestic economies and to boost certain growth sectors, including bio, battery, internet, and the game. The Korean government recently announced a plan to launch so-called New Deal investment funds and also indices, a majority of which will be financed by the government and the government related the banks. And also KRX recently launched bio battery internet gains, as known as BBIG indexes and ETFs, to promoting this new deal, the beneficiaries. On the ground, we have seen a lot of interest and a positive feedback from the local the retail investors. So we believe that definitely this new big ETF launches and the government strong commitment to the New Deal investment is positive for overall the Korean equity market going forward. Next page, on page 11, the last issue is liquidity. As you can see on the chart below, that gray line is the margin, the gray, the section is margin debt as a percentage of a market cap. Along with the KOSPI re-rating, this margin debt as percentage market cap has also rising. And also the credit banks has increased quite sharply for the past few months. So recently the regulators has ordered the banks and the brokerage firms to tighten credit loans or the margin debts. So we believe that this tightening the liquidity is more negative than positive in the Korean equity market. But once again, we believe that the magnitude of the negative impact could be short-lived, at least is not as high as the market, as big as what market has been concerned right now. So for example, speaking with our bank analyst, the credit loans recently extended. Majority of the credit loans, increased credit loans could have been funneled into the property market rather than stock market. So overall, it's negative, but we believe the negative impact should be pretty not significant, not as significant as what market is concerned right now. On page 12, so 4 main issues related to the equity market. Once again, it's negative, but the magnitude of negatives are not as big as what market is concerned about. So if there are any concerns, any the market volatility or market corrections caused by these market issues, we believe that could provide a very good opportunity for foreign investors to relook at the Korea stock market. Next, several slides that I'd like to cover about the fundamentals of the Korea stock market. Firstly, earnings recovery has been underway, and also upward earnings revisions. As you can see on the chart, third quarter OP consensus has been going upward, bottoming in September at 70%, at below 80 trillion won, and it has been up like a 7%, 3.6% for the past 1 month. Semiconductor has the main drivers for the upward revisions at 7%. Non-semiconductor is only 2% upward revisions, still not significant. But speaking with our respective non-manufacturing, non-semiconductor analysts, upward revision I just started of the magnitude will continue to accelerate. On page 14, not only for second half, 2021, next year, on your right side of the chart, aggregated operating profit growth for KOSPI in 2021. We do expect almost 37% year-on-year growth. Breaking down into first half, second half, definitely we are expecting much bigger turnaround and recovery in first half than second half, many thanks to the low base of COVID-19. On page 15, upward earnings revision. Like I mentioned, second half, these upward earnings revisions will continue throughout 2021. Lastly, next page, briefly touching upon the valuations. Okay, this earnings recovery and upward earnings revision, that's really great things, but will that be already reflected in the current valuations? Our answer is no. We do not think the current valuation fully reflects the positive impacts, positives that we mentioned. If you look at the chart on your left side, the orange line is the KOSPI's 12 months forward PR. Now it's trading at 12 times. If you look at it, it looks like from trading at a premium to historical, the average. But we believe that the recent KOSPI re-rating and the valuation multiple expansion is largely driven by lower interest rates, as well as lower risk-free rates. So if we adjust this risk-free rate, it's actually historical. Average PR would go up to 14 times. But then current valuation at 12 times is trading at a historical discount to from the historical perspective. So we believe that the current fundamental recoveries of the KOSPI has not been fully recovered, reflected in the current valuation of KOSPI. So summing it up, there are several short-term issues such as higher capital gains or liquidity tightening, but we believe that those issues could be short-lived and will be outweighed by anticipated fundamental improvement in KOSPI's, in the KOSPI's earnings recoveries and earnings turnaround. So once again, next year we remain positive on the Korea equity market and recommend foreign investors to really look at the Korean stock market at current level. So this is the most about my presentations. I'll stop there and thank you very much for listening.
Thank you, Mr. Jung, for your comprehensive and insightful presentation. And now let me pass the time to Ms. Myung-sil Kim, Head of Fixed Income Team, Research Center of Shinhan Investment Corporation, who will share with us the Korean fixed income market, outlooks and investment strategies. Please welcome Ms. Kim. I'll hand it over to you.
Yes. Hi, I'm Myung-sil Kim, Shinhan Investment Corp. First of all, thank you for inviting me to the webinar. It is such an honor to introduce Korean bond market in here. Today, I would like to introduce briefly about the bond market in Korea. I wonder if you know the answer to the questions. What is the size of the Korean bond market? Korean bond market is worth $190 billion. It is a lot larger than people think. You can tell by the size of the equity market in Korea. It's even larger than that. Let's start with slide 4. One more slide, please. One more, yes, thank you. The first chart shows interest rate with maturity of 3, 5, 10 years, mostly traded in Korea bond market. With COVID-19 spreading globally from February, the Korean government and BOK, Bank of Korea, have taken all-out measures to protect the real economy and stabilize the financial market. Monetary easing drove down market rates to record low levels by the end of July, but bond market volatility rose again from September due to increased supply problem and the US Treasury rate. Next slide, please. I looked at the results of Korea bond market investment. The chart on the right is the annual yield of the Korea bond market index. Domestic bond continued to post a positive annual return at 2.2% for 2020. This is a poor performance compared to last year. However, negatively impacted factors to bond yield are gradually improving. It would be better to explain the Korean bond market in more detail, focusing on monetary policy and demand and supply and issues. Next slide, please. Next. First is monetary policy. Monetary policy has to do with the fiscal policy. The two charts below show the costs associated with Korean New Deal policy project. I believe that base rate continue to keep very low level under the Korean New Deal initiative. In 2021, the Korean government is expected to increase spending needs due to potent stimulus for the economy. The central bank's role as a financial policy supporter can be further highlighted. In other words, base rate likely to keep low for a long time. Next slide, please. One more slide. Yes, thank you. The following is the Bank of Korea monetary policy plan for next year. It is divided into 3 stages. The BOK may pledge to supplement its existing asset purchase plan and provide forward guidance of low rates for the long term. To be more specific, the BOK need to expand the share of long-term and ultra-long-term bond purchase in order to respond to demand from insurance company and so on. I think that more details should be released through communication from Monetary Policy Board meeting in 2021. The second issue is the demand and supply of the Korean bond market. One more slide, please. One more slide, please. And next slide. Thank you. The key is the level of demand for foreign investor, including the audience today. The first chart is balance and duration of foreign bond holdings. The balance of KRW dominated bond held by foreigner hit all-time high of $130 billion in August. It is in contrast to what we witnessed during the global financial crisis in 2008. I think that foreign demand for Korean bonds should remain solid as long as the following conditions are met. First, attractive absolute yield. Second, positive foreign exchange hedging premium. And lately, low credit default swap risk premium and stable foreign exchange rate. Especially, I like the chart on right of slide 11. Next, please. Yes. This chart shows the attractiveness of Korean bonds compared to countries with a similar credit country. Korea bond rate is the second highest after China. It is a big point. Because of this, foreign demand for Korean bond will continue to flow in the next year. The last one is a checklist of the Korean bond market next year. One more slide, please. One more, please. Yes, one more, please. Thank you. One more, please. The chart, I will tell you two things. This slide starts from page 57. It is low inflation in Korea. It is an important issue in the bond market too. The chart on the left shows the average monthly inflation rate in Korea since 2012. The chart on the right shows the inflation rate by item of expenditure. In Korea, inflation expectations are low with prices temporarily rebounding or seasonality, but long-term factors point to a downtrend. The Korean economy seems to need time for CPI to point toward the recovery in consumption and investment and so on. Low prices could work in favor of the Korean bond market. The second one is a short and long-term spread. Spreads are closely related to economic condition. Next slide, please. Short and long-term spreads will recover to reasonable level upon the return to the economic trajectory of 2018 and 2019, between our late expansion path and recession. Long-term interest rate could fall in 2021. In conclusion, Korean bond yields should be stabilized downward on closer cooperation between the government and central bank. Of course, there are some risk factors for investing in Korean bond. Let's go back to the previous page for a moment. On slide 12, the chart on the right shows the annual asset growth rate of Korean insurance company. The slowdown in the asset growth rate of insurance companies, they account for 40% of Korea bond market shares. But I believe the Bank of Korea and other pension funds to replace the in-place insurance company. It may not be a big problem right now. Please refer to the final slide, the forecast interest rate of Korean bond market next year. Slide 60, maybe. Next, please. Yes, thank you. Please refer to the final slide, the forecast interest rates of Korean bond market next year. I believe that interest rates on Korean bond will gradually stabilize. Although the benchmark interest rate may be frozen, the Bank of Korea's other easing policies may continue. After a time gap, BOK's bond purchase should help to offset supply burden in the market. So far, I have talked about the overall Korean bond market. Obviously, the role of Bank of Korea in the bond market will expand in the future. In terms of return and policies, I believe that the Korean bond market has investment opportunities. I hope my data will be of any help to you. Even in 2021, there may be many things that are unpredictable, but Korea is a country with a well-established government and central bank's policy system. In that respect, it is necessary to think about investing in Korea bond. I hope you will find a good investment opportunity in Korean bond market next year. Thank you again for having me for the seminar today. Thank you.
Thank you for your informative presentation, Ms. Kim, for the bond market. And now, panel session is coming. Yeah. Now, let me pass the time to Mr. Lyndon Chow, who will be moderating a panel discussion on overseas investors' view on Korean capital market. Lyndon, it's your turn.
Great. 감사합니다. Thank you very much, Myung-soo. So I'm very pleased today to be joined by a distinguished set of speakers for the panel. We have Mr. Simon Williams for BlackRock. We have Ross Whitaker from Credit Suisse and Nicholas Peach from Goldman Sachs. Thank you all for joining our panel and our webinar today. And thank you for the speakers invited by KOFIA to give us great insights with respect to Korea. Clearly, post-COVID-19, governments around the world have been forced to inject quite a lot of stimulus spending and growing the fiscal balance sheet quite a bit and incurring, growing deficits. So that's a very interesting presentation by Mr. Chung on that Korea is no different and is doing the same thing. Very interesting to hear from Mr. Chung what's been happening in terms of the equity capital markets, supported by strong fundamentals, because Korea is still largely a technology story, and technology has clearly been the key beneficiary in global markets around the world, and Korea has been no exception to that. But it's kind of sobering statistics to see that the institutional and the foreign share of Korea's capital markets, especially on the equity side, been decreasing over the past couple of years with the rise of retail. To a certain extent, that's no different to the phenomenon we're seeing in many markets around the world as well. But it's an interesting stat to see the significant uptick in terms of margin financing for retail investors mortgaging their homes in order to bet in the market. It's that was a very interesting chart that we saw earlier. And very interesting presentation from Ms. Kim as well, looking at the Korean New Deal and the impact to bond rates which will probably stay relatively low in order to support the fiscal expansion. So that was a very, very good macro picture with respect to Korea. And maybe I start by commenting how lucky I feel to be here in Asia Pacific. On a relative basis, we have relatively higher yields. On a relative basis, we have faster growing GDPs. Money has no national loyalties. And so with a strong fundamental story supported by a market which is relatively easy to invest in, that's where the money goes. So that's what we're seeing around the region, frankly. So we're seeing in some markets taking rather aggressive policy action and seeing significant impact to investor flows. One market to the west of Korea, of course, through their policy actions, have seen the foreign ownership of their A-share market triple over the past 2 years. Let me mute my phone. Sorry for that. And what we're seeing in some of the Southeast Asian markets around the region, trying to harmonize with the international T+2 settlement cycle, have also seen impact to their respective markets. Oh my goodness, so many beeps coming in. Yeah, and many economies seem to be a bit pressed with respect to domestic pressures and populist agendas, and therefore, as mentioned earlier, increasing the fiscal deficit in order to save the economy, whereas others have taken the choice to not sacrifice one for the other, to focus both on the domestic market as well as to focus on the global linkages in terms of exports and attracting capital flows. So it's a very, very interesting mosaic of different activities by governments, different policy being set around the region. And so maybe I start first by asking our panelists, these are the guys who represent an aggregate of $35 trillion US of assets around the world. How do global investors, when they look at Korea, what do they see? What do you see as the opportunities as well as the challenges? And maybe I start with you, Ross, for your perspective. So,
sure, Lyndon, can you hear me?
Yes, I can. Thank you.
Okay, great. Well, I'll start off just by thanking you, Lyndon, for inviting me to the event, and to thank everybody who's logged in to listen to us today. It's a pleasure to be here and to be a part of it. So I think I'll start off by talking about some of the opportunity as I perceive it, and then go on and also address some of the challenges that we're currently working through as pertains to the market. So, in terms of the opportunity set, starting there, from my perspective, there's a tremendous amount of investor and trader interest in the market. There are, firms that we work with that have to trade in Korea because they're obliged to trade in line with global indexes. And there are other firms who very much want to get involved in the market and perceive there to be opportunity for them to either start trading or trade more actively in Korea. I would say particularly over the last 2 to 3 years, we've seen a steady increase in interest in Korea. And I think that interest is indicative of the potential of the market for ongoing growth and a deepening of the liquidity that would be available. I run a team of individuals here in Asia who are focused on designing, deploying, and operating electronic trading platforms that allow clients to use DMA and algorithms to trade across the region. And my team is spending a significant amount of time working with clients to help them understand how they can access the Korean market, consulting with clients about the market microstructure, and helping them understand how they can use technology to optimize their trading strategies in Korea. And when I think about these discussions and the conference calls and the projects that we're doing internally and the connectivity that is in progress, it's clear to me that Korea is right up there at the top of the list in terms of appetite and interest and curiosity in the market amongst our clientele. And quite frankly, I don't think that necessarily should come as a surprise to anyone who's close to the industry. There are many reasons that make Korea an attractive market, some of which have been discussed earlier this afternoon. It's home to some of the world's great corporations. There's an abundance of liquidity in a large range of stocks. There's strong rule of law. There's technology infrastructure that's generally sound. So I think investors perceive it to be a credible and attractive place to invest and to do business. The other point I would make when we talk about the opportunity is that I see the interest level being coming from a very diverse spectrum of types of investors. We see demand for market access and electronic trading solutions from large institutions and asset managers, from more fundamental research-driven hedge funds, and also from large systematic trading firms. And so, when I think about that fact, I think one of the critical ingredients for the formation of a really robust and deep liquid market is to have that diversity and that broad industry perspective. Whether you're a broker, a trader, an exchange, a regulator, I think we can all agree that having that diversity of trading strategy and investor types will help build and strengthen the market. A healthy balance of long-only retail hedge funds, systematic, both domestic and foreign firms, generally bringing that together will add resilience and more consistency to the liquidity profile of the ecosystem. So again, yes, I think, on a day-to-day practical level, I do think there's a high degree of client interest in Korea. I think that it's coming from a variety of different places. And I don't think you have to look any further than ASIFMA and the working group that we have that's dedicated to Korea and the event here today for evidence of that interest. Now, you also asked about challenges and challenges that investors or traders are facing when it comes to Korea. And I think, for any market, there's always going to be challenges and frictions that restrict involvement from traders. And it's always up to the regulators and governing bodies to decide how they want to align policies to optimize both growth and also control. And I don't think that those two goals are necessarily have to be competing goals either. One of the topics that we've been focused on with ASIFMA is around the KRX trading rules and the processes that they have in place to identify what are deemed to be abnormal trading patterns. Now, I think it's important to be clear before we go any further into this topic that all of the ASIFMA membership, I believe, believes that having well-defined trading rules, a strong surveillance regime, and enforcement mechanisms that are meaningful are a critical component for any functioning market. I think we're all advocates of strong governance, monitoring and holding people accountable when they break the rules. It's vital for the integrity of the market. However, there has been observations, across the membership of ASIFMA, both from the buy side and the sell side, that there have been cases where warnings have been issued by the KRX for infractions of rules that either people had no knowledge of or limited knowledge of, or cases where the rules were not published in a way that was easy for the investor community to access those rules and to understand those rules. And then I think the second observation that's been made is that there are behaviors that have been the cause of warnings that, if properly understood and looked at within the context of the overarching strategy that the trader or the investor was pursuing, would probably be found to be innocuous, would probably be found to be entirely appropriate. And in other words, there are cases where if you look at just a very small slice of trading in a very narrow way, it may appear that trading is intended to have an adverse undue effect on prices, on the market price. However, if you look at that same trading strategy more broadly, more holistically, it may be that same strategy could be seen to be entirely understandable and reasonable and acceptable to most people who are involved in the market. So, this is important because certainly brokers and our clients, many of whom are members of ASIFMA, care deeply about their own credibility and their reputations, and have concerns that even if they have the best intentions to stay true with the spirit of the rules, that there is a risk that they may inadvertently run afoul of the letter of a rule that they were unaware of. And of course, they would be concerned about the reputational repercussions of that occurring. So, if people have those concerns, or if they are unclear about what the rules of the road are, it's very likely that they will withhold from trading or trade less than they otherwise would. And if enough people, enough investors have those concerns, then it could have a knock-on effect on the overall liquidity profile of the market. It could deprive the market of good liquidity, of both quantity and quality of liquidity. And I think we can all agree that would be an unintended consequence that we'd all want to avoid. So, what have we been doing about it? We mentioned earlier on this event, it was mentioned, I think, by Lyndon, by you, that we took a trip to Korea almost a year ago. We issued ASIFMA, issued a white paper earlier this year to address this challenge, as well as some others. And then we've also had discussions earlier this summer, conference calls with the KRX. And I felt that those calls all went quite well. I thought that our trip went quite well. I was encouraged by the level of dialogue, the communication. I think that people were engaged. I felt that our concerns were listened to, and then likewise, the KRX shared with us more information about what their objectives are, and that helped us gain a better understanding. So I do think that we've started a pretty constructive dialogue about this concern that I mentioned, but also others as well. And so I think, Lyndon, we're off to a good start, but there's more work and more conversation to be had.
Thanks very much for that, Ross. I'll chime in with some thoughts later, but maybe I hand off first to Simon.
Sure.
Simon, you want to add to that?
I do, absolutely. Lyndon, can you hear me okay? I presume you can. I'll just check before rattling on. I would also like to extend my thank you to Lyndon for inviting me here today, and it's thank you very much, Wangsu. It's very nice to be involved in another KOFIA event as well, and especially talking about a very important subject like the Korean market, which is something which I've been looking at throughout my career, looking at trading emerging markets, and watching Korea grow. In London, I was very much part of funds that were trading FTSE, so it was a very important process at the time to kind of navigate and see Korea get promoted as a developed market. So I've taken a keen interest from learning in those days, and I have seen quite a lot of developments and increases. So it leads us here today to kind of talk about some of the challenges and some of the opportunities, and perhaps some of the kind of next steps, and taking on some of the experience that we've learned from from being involved in lots of other markets around the world as well. One of the things that always strikes me about Korea is just the level of liquidity. Korea has had the biggest growth of volume turnover in APAC this year. I mean, it's the third highest turnover market. I mean, China and Japan are ahead. I mean, but it's had some days where it's had larger turnover than Japan, throughout this year, which shows that there is a huge amount of interest. I know we were talking about a lot of retail participation in some of the previous discussions. But one thing that I wanted to kind of just really highlight and call out is, in order to kind of for the market to grow consistently and for the long term, there has to be a lot of confidence and in the market, and a lot of deep understanding of where we're headed, and working with the industry in order to kind of make that successful. And I say that in absolutely every single market that we operate in, and working with ASIFMA and other industry groups, it's incredibly important, and I think an honor to have the privilege to be able to do it. Korea, as a starting point, is one aspect that we implement a lot in is index rebalancing at the close, and I would say that Korea Exchange has implemented one of the very best closing auctions in the world. I mean, it's got a good length, 10 minutes. It's got a random closing period. It's got volatility extensions. These are all features that we ask, or suggest to any exchange or regulator around the world as a model to go for. And that really provides a core confidence to participants in the market. So having a sound platform is absolutely essential, but equally, if I kind of build a little bit more onto kind of the comments that Ross was making around kind of transparency and the market having a very broad understanding of the trading rules and how to participate in the market, that is incredibly important. And I think Ross did a great job in terms of just articulating that. The one thing that I just want to add to it is, experience that we've had over the last few years in interacting with the Shanghai Exchange. You will, I'm sure, all be aware that China has been through a couple of phases of inclusion for MSCI and for FTSE indices, and there's been a lot of dialogue with the industry about how to kind of manage those flows, how to kind of make certain parts of the microstructure work efficiently, like market on close. And Lyndon will remember, because we had a lot of discussions about this, and ASIFMA were integral in terms of arranging a lot of these discussions. But a lot of the feedback from the brokers at the time were, well, I don't know whether to use a hard participation rate in the auction, or whether I should use a limit of 3% or 1% or whatever. If we did a panel discussion across every single broker, everyone would have a different view. So one of the things that the industry was able to do, and like I say, ASIFMA was very critical to this, was asking the Shanghai Exchange and also the Shenzhen Exchange to come down and create forums to discuss their rules and to discuss, what they were worried about, what they were trying to achieve, and how the surveillance worked. And although it was mainly centered on the principles, what was able to come from that is all brokers being able to to really kind of configure very, very similar limits and controls in operating in that market. And that just created a huge amount of efficiency and confidence in the mechanisms. And what we've seen since that is, if I take it kind of from an index rebalance point of view, one of the things that we have to worry about, in the index world when you do index strategy is making sure that you can marry up and transfer, the index weightings, the adds and deletes, which often are reasonably sizable trades from a ADV perspective, and being capped by a participation rate is quite tough. So one of the things that came out of these discussions was, well, it's okay to have a particular snap limit in place, and that was successful. And what we've seen since then in the Shanghai auction in particular is big increases in the amount of liquidity and transfer of shares in the auction between participants that are trading around the index close, which has created a lot of confidence and ongoing ability to function appropriately in that market. And I suppose I share this experience because we often come across similar kind of conversations that Ross was highlighting with brokers, where there may be different interpretations of rules that would be, I'm sure, are all sensible. It's incredibly important that people and all participants in the market understand the core principles, but sometimes people need a helping hand in order to understand exactly what is expected and to kind of make sure that the necessary controls in place. So those are the type of things that I would encourage the KRX to kind of look at and to kind of engage with the industry, both domestically and internationally, for their perspective in terms of how we've seen that type of engagement help in other markets around the world. Okay, so that's one thing that I wanted to share with you. The second thing that I wanted to share was around position checking. One of the things that is very important, I think, in a lot of markets that have particular ID systems, they wish to, the ability for investors to be able to check that their positions are available to sell is very important to people, because we want to make sure that we're only selling stock that is available and will efficiently post-trade, process through the settlement mechanism. So one of the things that we've seen around the world, I mean, the Taiwan exchange has got a very efficient model which creates a utility that all brokers can take their client orders at a particular account level and check that those stocks that their clients are intending to sell are available. They can lock those positions. They can trade on the market, knowing that all the background checks and pre-trade checks have been done, and they can carry on safely in the knowledge that there's not going to be any downstream processing issues. And that is a feature that a lot of markets around the world, sorry, a lot of the ID markets around the world would like to see. Currently, we have had a number of conversations with the Hong Kong Exchange, Shanghai Exchange, and Shenzhen Exchange about creating similar mechanisms of pre-checking in the Stock Connect mechanism, just to kind of make the process more efficient and scalable as we look to do omnibus trading. So again, those are kind of features that often come up in conversations that I have with risk people, with operations people, about how to kind of enhance international experience in the market. But there is a lot of interest, and we want to kind of help develop it for the future and keep everybody safe. Lyndon, back to you.
Thank you very much for that, Simon. Yeah, and I think you honed in on the key element of success, and that's dialogue. It's having conversations. It's having conversations with the exchanges, the regulators, building understanding, building trust, building collaboration. So we're very happy with this webinar today. It's a form of communication, dialogue, and hopefully the first of many conversations. Perhaps I now turn to Nick from Goldman. You know, there's a unique phenomenon in Korea called the top broker leaderboard, which I appreciate your thoughts on. But maybe before talking about that, do you have any final thoughts on the theme of surveillance and transparency?
Well, I might just add one more thing, and again, I'll share the other panelists. Thank you very much for having me today. It's great to have this opportunity to attend. I would just add, you know, really what I wanted to touch on was best execution, which has elements of certainly has elements of you know, the leaderboard, which we'll talk about, but also the controls as well. I just wanted to take a quick step back and you know, just sort of remind everyone at the seminar, the webinar, like what we are trying to do, all of us on this panel, I think I can speak for every panelist, is to achieve best execution for our clients, right? We're trying to get the best possible price with the least impact, the least market disruption, right? And one thing, just to build on Simon's example in Shanghai, I mean, we all understand that there are rules in every market, and they may differ by market, but really, you know, when we know what those rules are, and I think Shanghai is a great example because they published very specific thresholds for things like cancellation rates, right? And cancellation rates are very important for providers like us because, you know, a lot of the times, unlike a retail client, we're not trying to, we don't want to go out and you know, pay the other side of the spread every single time. We want to try to capture as much of that spread as possible, which can be quite wide in some markets and some stocks. And so, you know, what that leads to, though, is as markets move and as we're kind of posted out into the market, we need our orders to move as well, right? And that sometimes will look to an exchange or to a regulator as if we're posting a lot of orders but not trading a lot, right? Trying to unduly influence the market. In fact, we're not trying to do that. We're trying to just make sure that we maximize our orders' chances of execution and minimize impact. And one of the things we were able to do after Shanghai published their guidance with their cancellation rate thresholds, which I would say are very low actually for any market, we were able to turn around and design new algorithms and alter our algorithms' passive placement strategies so that we were able to still provide best execution to our clients subject to those thresholds. And so knowing the numbers and knowing what's being looked for, it not only allows us to not run up against the guardrails, but allows us to optimize our execution footprint within those guardrails and really allow us to provide best execution to clients. And when I say best execution to clients, we're talking about, you know, very, very large institutional international investors. And so, you know, I did want to point that out about the surveillance point really being an important part of best execution. But I think another thing that is important when it comes to best execution is what we call signaling, right? You know, whenever large institutional investors trade very, very large orders, as Simon alluded to, they can be very, very sizable orders, sometimes spanning multiple days volume and need to be worked very carefully. And so one of the things that is very important to us when we're executing clients' orders is that we maintain a low profile, if you like, right? We don't want the market to know that we may be buying multiple days in a stock, because that's a pretty powerful signal to other investors in the stock who may feel like they want to come along for the ride, right? And that is always deleterious to the client experience because, you know, obviously, as soon as everybody knows that there's a big buyer in a stock, that stock's only going to go in one direction, right? And that leads to a worse average price for our end client, right? And so we're always trying to maintain a certain level of anonymity and discretion when we work these orders. There's a phenomenon very unique to Korea. I don't think it exists anywhere else in the world, called the top broker leaderboard. Right now, this is data that's most of you will perhaps be aware is available as subscription data, and it lists out the largest buyers and sellers in a name by broker, literally on a leaderboard live. And that kind of information is not information that we feel is accretive to our client, right? If we're a big buyer, if let's say Goldman Sachs is a big buyer for an end client in Korea on the day in a particular name, we would rather that information did not get published out via a paid market data feed. It is not advantageous for our clients. Clients are shocked when they hear that this phenomenon exists in Korea, and it's very non-standard. And it is a phenomenon that, while we sort of understand it can be quite popular on shore with retail investors, we sort of question, one, why is this so popular with retail investors on shore? And two, is it worth, again, it's all back to confidence, right? Is it worth eroding confidence of the world's largest institutional investors for a, I guess, product is what you would call it, that is, that has very few positive effects in our view for our client base.
Thanks very much for that, Nick. Ross, is there anything you want to add to that? You're on mute, Ross.
All right, is this okay now?
Okay. Yeah, all right, thank you.
Yeah, just very briefly, as Nick mentioned, clearly, exposing the size that a broker is trading in the way that the leaderboard is has negative effects and makes it difficult for the end client, the investor who's trying to manage that trade, to do so effectively, particularly given their objective to execute optimally. The other part about the leaderboard that we've discussed in the past, but I think it's probably less understood within the marketplace, though, is that not only does it make make things difficult for the person the client who's executing the trade, but it may not necessarily be helpful for the retail client the way that the retail client thinks that it is. Because if more sophisticated, technologically savvy trading firms are also consuming that information and using that information to predict how retail investors may react to it, then you actually could be exposing them to unintended consequences, and that stock prices will not only will they potentially move against the client who's executing the large order, but they could also move in unpredictable ways that are contrary to how an individual investor thinks the stock is going to move, and the strategy they develop around that assumption on how the stock is going to move, because somebody who gets the information quicker, has more technology and data at their disposal, may be doing things to actually preempt and negate the strategy of the individual investor. So it has multiple potentially negative effects on the investor community, given the way that information is presented.
Thank you, Ross. And Simon, how do you feel about, as BlackRock, your flow? Of course, it's within the broker's flow, being so visible to others during execution. How does that make you feel?
Sure. I mean, look, I think both Nick and Ross have kind of articulated a lot of the unintended aspects of it. I mean, I can see on one side, if I kind of put a balanced kind of approach, one of the useful aspects of it is that it helps identify maybe which broker has the other side of a trade that you may be looking to execute. So you can have a conversation with that broker in order to kind of make that connection. I can see some benefits in that way, but I think having a good broad discussion about this is what's happening, what are the unintended consequences, and making a decision about that is appropriate. I mean, I don't think it's necessary to have this visible leaderboard, and certainly kind of having delayed publication for a day, 2 days, or whatever would be more appropriate. But it does take into a kind of a different area that I might, if we're trying to solve the kind of let's make liquidity visible and order to help institutional clients match up large ADV orders. I think an area that is worth considering is indications of interest. Korea has quite a lot of privacy restrictions around the ability to publish indications of interest to clients, to people that would be a reasonable bet to find the other side of the flow, and that's kind of, I think, reasonably unique to Korea. And one of the suggestions I would like to kind of for people to kind of think about is that we've done a lot of work, certainly in Hong Kong, around kind of really tightening up the process and the behaviours around indications of interest. We as an industry, we've really got together to discuss that, and Linda knows all about this work, and I think this is a good time to kind of reflect, saying, well, are there suitable understanding and controls in the market to kind of let participants and brokers and the clients, the brokers on behalf of their clients, to IOI their flow if they want to find the other side of that ticket, and therefore match a higher ADV order and reduce their impact in the market. I think this is a good time to think about that, and that would be a suggestion from me to also combat maybe the top leaderboard. Back to you, Lyndon.
Thanks very much for that, Simon. Yeah, I agree. We just launched the IOI APAC IOI charter, warmly received to and supported by the regulator. So yeah, we'd love to explore how to further expand coverage and applicability across the region, including in Korea. So Simon, while we're on with you, maybe if you could help also share your thoughts with respect to the FX angle. I mean, we know it was a really bad situation during the Asian financial crisis when the IMF had to come in, and there's quite a lot of sensitive about the Korean won. But nonetheless, that's one of the key impediments which make it difficult for MSCI, for example, to upgrade Korea from an emerging market to a developed market. Are there some practical solutions to some of the practical issues that a global investor like yourself deals with in the area of foreign exchange? What are some of the issues there? Can you share with us?
Of course, Lyndon. Look, I'm not an expert on foreign exchange trading. I'm certainly highlight that I'm an equity trader. But every time we do an equity trade for an offshore, a non-Korean entity, the base currency is not going to be Korean won. So an FX needs to be done in order to kind of, to repatriate to the home currency, the base currency. But what the biggest issue that is at place is that the local Korean FX market closes at exactly the same time as the cash market. Now, if I went back a few years, and I can't remember exactly the year that the Korean market moved from a 2 p.m. close to 2:30, but what happened in those days past, we used to have half an hour after the market closed, after we got the final fills from the closing auction, to tally everything up and to go away and do an FX while the market was officially open. So we lost that ability when the market went to a 2:30 close because people haven't finished their execution. Now, how I understand it is that custodians and FX traders can still go to the market to do an FX when the market's closed. But when a market's closed, the spreads widen, and maybe the ability to do a certain size is not so possible. So we may be carrying over, or investors in general may be carrying over risk to the next day. So, if I kind of paint the picture in that, I think you can kind of get a good sense of the challenge. Our ask would be that there is more time to allow for the FX to be done. I mean, half an hour in previous times was probably too short, but an hour or so and guidelines around that would be helpful. I think obviously we all appreciate that selecting the stock and trading the market are important attributes, but the FX is absolutely huge in ensuring the total cost of a transaction in the market is sensible and reasonable. And I think there's things that we can look at in order to kind of make that more efficient for international investors. Back to you, Lyndon.
Thank you, Simon. So we're not asking for a free float of the currency, unfettered access, but just some window to better hedge the FX exposure once we understand what the equity position is. Anything you want to add to that, Nick?
No, I think Simon said it very well. Nothing to add from me.
Okay. All right. Cool. All right. How about you, Ross? Any final comments on that?
Not a whole lot to add either. Yeah, I think Simon said it all. The only thing I would add is Simon's not alone. It is a concern that clients frequently flag to us. So I think there's probably a pretty broad consensus about some of the complexities and challenges of what Simon described.
Okay, cool. Yeah, so look, I mean, when we came to Korea back in November, we were greatly encouraged because it seems like two of the sticking points with respect to an MSCI upgrading Korea. One is the omnibus issue, which we later learned is actually fairly functional, except with some exceptional cases around shares that are close to the foreign ownership limit. So these are problems which we could probably work together to tackle. And also on this FX issue, it doesn't need to be really, really major surgery. Potentially there might be some practical solutions around this. But all it takes is dialogue. All it takes is constructive engagement. And I just, echo, Simon and Ross and Nick. I mean, we've had a lot of constructive engagement with other exchanges and regulators in the region. And China honestly has been the poster child over the past couple of years. So, we go to them with some constructive suggestions and they turn things around sometimes faster than we anticipate. And they've been rewarded by good policy decisions, so much so that foreign ownership in the A shares has tripled over the past couple of years. So, so we look forward to doing something similar in Korea. We flew a team of buy-side and sell-side reps into Shanghai. We met with the exchanges, and we introduced foreign international trading practices, tried to build understanding around things which they might look at as problematic or suspicious, but they're actually not nefarious at all. And we would love to do something like that in Korea, and to build understanding, to build trust, and to build the markets. So yeah, we think there's a lot of opportunity here to work together. We're very grateful to KOFIA for giving us the opportunity to collaborate together on this webinar, and we look forward to more interactions. And we look forward to when we can travel again and to see you guys physically and to shake your hand and maybe even give you a hug. So we're very much looking forward to that. So maybe Myung-Soo, I hand this back to you. Myung-Soo, are you still there?
Oh, I'm taking over from here. This is Millie.
No.
Myung-Soo, if you want to say a few words before we close the event.
No, actually my internet is not very stable now, so I'll just hand it over to the Millie. Yeah.
Okay. So thank you again for joining us today. Our next virtual event will be on Wednesday, October 28th, ESG and Sustainable Finance in Asia, the FinTech and Data Challenge. Please reserve your seat by either scanning this QR code on the screen or visiting our website, www.asifma.org/events. We hope to see you there. Have a great day. Thank you.
Thank you. Thank you, guys.